Ethereum has officially broken below the 200 exponential moving average right here, and this is bearish. We managed to push above this a little bit ago, but the fact that we're back down is not good for crypto. Here's everything you need to know. How's it going, everyone? My name is Jake with Trade Confident, and today we're going to be talking to you about Ethereum right here. Let's go ahead and scroll down. I'm going to run through these metrics real quick. First up is the Ethereum Emotional Index, and you can see that we pushed into anxious territory, and most often when we see that, especially if we drop into fearful, this is when we're seeing moves back up in the market. Scrolling down here to the Ethereum long versus short trades, you can see that short trades have very slightly, it's actually pretty hard to see. Let me see if I can zoom in here a little bit. Very slightly here have been moving down. On the Ethereum Well Smart Money metric here, we are still seeing a lot of long trade sentiment, still not reaching into the 800 to 1,000 range that we like to see for actual moves up in the market, but we are seeing a lot of continuous long trade sentiment. Next up is the Ethereum Volatility Breakout Detector, and as the price has very steadily dropped, we got a little bit of a dip here, but we are seeing continuous low volatility in the market. However, over the next couple of weeks, I think this is going to change. There are a lot of dates that you need to know, and I will be talking about this and covering as the dates come up. I will talk about the first date in the live chart, so stay tuned for that. But before that, it looks like the next major structure support we are approaching is $1,462. And as the price moves down here, I would not be surprised to reach this very, very soon. Last but not least is the Ethereum Daily Trade Scanner. And again, as the price drops, we're going to be looking for a buy signal like the one we saw back here in anticipation of the next move up. As soon as we see that buy signal, as long as other metrics and indicators are lining up, this could be a really good place to enter for the next move up in the market. Now, if you want to get access to all of these metrics and more, including a brand new future forecast video and a brand new Wisdom Wednesday video that just came out yesterday, we have some new trade setups too. So if you want to get access to all of this and more, you can grab our membership at the links in the description, scroll down, hit show more, and it's going to be the very first one right here. Go ahead and click that. It'll take you to our membership page where you can grab the full access for $59 a month. This is what's going to give you access to all exclusive members only content, including future forecast, Wisdom Wednesdays, Morning Brew overview, Zoom coaching every single month, and you'll get access to the scalping, trade calls, and metrics across all 20 coins on our website. Just go ahead and hit subscribe now, follow the prompts, and we look forward to trading with you. Let's check out the live charts. Right now I'm looking at Ethereum on the 1-day time frame using the TC top and bottom finder, price versus while money flow, and trend exhaustion. These three here are trade confident indicators, and I'm also using the EMA, the 200 exponential moving average, and that is the blue line right here. Simply put, most often if the price goes under the 200 EMA, it's more likely that the price is going to be bearish, and if it stays above, it's more likely to be bullish for that time. As of right now, the price versus while money flow is low on its chart, and the trend exhaustion is just about in its bottom red territory. And I think if we push down from here, we will see this bottom out in anticipation of the next move up in crypto. However, that is just the technical standpoint. It is extremely important. We do need to pay attention to it. It is going to matter. But we also have to remember that we have the jobs data report here. Jobs, let me correct that. The jobs data report is coming out tomorrow, and this is going to tell us all about what the unemployment numbers are right now, and it will likely affect the CPI data and the FOMC meeting later this month. FOMC rate hikes are coming up on March 22nd, and if the data comes out badly across all the reports this month, I think this could be really bad. Now, we'll cover the exact dates as they come up, but tomorrow, March 10th, right here, March 10th is when the jobs data is coming out tomorrow. On top of this, the Mt. Gox exchange, this was an exchange that was hacked a long time ago, but creditors are finally getting their money back in the form of Bitcoin. Now, this Bitcoin was purchased a long time ago, way back here, and I don't remember that exact date off the top of my head. I'll get back to you on that tomorrow when this information is truly released, once we do a full report on it. But the price was much lower than it even is right now, even despite the bear market. The rumor has it that the money that isn't going to institutions is likely going to be sold pretty quickly for a profit. Smart traders may actually hold on to it, but if all of it's released, we're likely to see Bitcoin see a small drop down. So with that, I think it could bring Ethereum back down to the structure support. And especially if the jobs data comes out unfavorable, I think this could push it even further. So with that, honestly, I'm feeling kind of bearish. But in Travis's future forecast video, he did describe a scenario where a bear trap could play out. and shoot the price all the way back up. This is equally possible, and I want everyone to be aware of that. And if it does, I think we're going to retest this structure resistance right here on the move back up. Again, though, the first move I'm looking at is right here. Now, before we get into exact price predictions, because there is a little bit more you need to know, there is a structure support I need you to look at. I have to let you know you can get access to all of these Trade Confident indicators for up to $400 off. Again, at the links in the description, just go ahead and scroll down. It'll be the second link right here. Go ahead and click that. It'll bring you to our indicator page. In order to get the best possible deal with that $400 off, be sure to grab the bundle pack first. You'll get 9 indicators, including the trend exhaustion and price versus wild money flow, and it'll come with that $400 off coupon for the TC top and bottom finder. Purchasing all 11 of Trade Confidence indicators with that $400 off coupon is actually cheaper than buying just the TC top and bottom finder alone. So what are you waiting for? It's lifetime access. For a one-time payment, you get full dedicated email support. With that, let's get into price predictions and finish off this video. Now, I've said it repeatedly at this point, but I think the price is very likely to drop to this level at $1,459. This is just the next structure support right here. It's very, very likely we're going to hit that very, very soon. Even despite the price versus wild money flow and trend exhaustion being low, I just think there's too much bearish sentiment in the market to stop it from hitting that point. If not, we're going to get very, very close. Now, if we get a bunch of bearish sentiment, if Bitcoin sells off like crazy tomorrow from Mt. Gox, if we see the jobs report is really bad, I think we could actually crash through this and drop to structure support right about here at $1,352. However, I do want everyone to keep in mind, remember that this could be a bear trap and whales could actually eat up all of this liquidity. They could buy as soon as the price drops. They could buy up and up and up and pump the price up to take their profits. This is absolutely possible, and that is something I need everyone to keep in mind. So if you are making entries into this market, be sure to use risk management. We like to use the buy limit strategy here, and this just means splitting our investment into 3 equal portions, with the first being a market order, the second being a buy limit, and the third being a buy limit even lower, so if the price drops, we can buy the dip automatically. As the price bounces and moves back up, the first structure resistance is going to be right about here at 1,550, and if the bear trap really plays out hard, the next structure resistance I'm looking at is right about here at $1,675 to meet horizontal structure resistance right here, and to meet structure resistance, previously the ascending structure support, but now resistance on this ascending wedge pattern. But for now, the first place I'm looking right here is 1,459. Thanks so much for watching. Remember, trade safe, trade confident, and I will see you in the next video.